Okay, so I have decided that I'm going to do a series of taking $100,000 to $1 million. I believe this can be done in 6 years' time. So by July 21st of 2032, I believe that this account can be at $1 million. I've been wanting to do something like this for a long time, but I haven't found another trading platform that I like more than Robinhood. So I didn't want to have to rebalance money and trade on a platform I didn't like to be able to do just $100,000 in this account. But I've been using Webull a lot actually, and I am obviously not hired or sponsored by any companies at this point. So I do genuinely really like Robinhood and Webull. So I've decided this is a good time where I'm going to split ventures here, and I have $100,000 in the Robinhood, and we're going to trade to $1 million. And you can see I'm not just blowing smoke. My year to date is almost 52%. Okay, the SPY is 9% year to date, which is pretty good. A lot of people will be happy with 9%. There's nothing wrong with 9%. I personally think index funds are overrated. I believe that the stock market is a lot more simple than Wall Street makes it out to be. I think it's a lot more user friendly than people think. Granted, you trade on the correct platform. And I think that there's a ton of gains to be had. So I've been trading for about 7 years, but of those 7 years, 4 of those years I was in college and really had no money. So only about 3 years to 2 years of trading where I've actually been able to trade with a lot of buy power. And by a lot, there's always a bigger fish, right? So this is, to some, this is a laughable amount. To some, this is a ton of money. So how did I do that? Well, what I did is I have a lineup of stocks that I am bullish on overall. And what I do is I use momentum trading in order to capture the most upside in a stock's run, right? So you see Microsoft. Microsoft has been a dead duck for a year and a half now, but I've been able to make over $20,000 by buying low, selling high, buying low, selling high, getting in and out. Okay. Now this isn't a daily thing, but it can be a weekly thing. It can be a monthly thing. You can catch waves of where you feel a company is undervalued and where you think a company is at its fair value. And that's what we do. We essentially ride undervalued companies to their fair value, and then we get out. The only way to make substantial money in the stock market is to find the company that reinvents the wheel, or to find a way to manufacture profits. Because I don't know about you guys, but 9% is pretty boring. Okay, 50% is way cooler. All right, I've been able to do this consistently for about 3 years now. So, like I said, I've only been trading for about 3 years with any considerable amount of money. And honestly, I've made a ton of mistakes and I've had a ton of victories. And obviously, at this point, the victories have outweighed the losses. But the important part is to make your mistakes early. Okay, I would much rather make a big mistake with a $10,000 account than I would with a $250,000 account. You know, one, you may lose a couple $100. The other one, you may lose tens of thousands of dollars. Okay, so I was very fortunate to make a lot of mistakes early to where I was punished in terms of percentage, but I was able to trade another day because it really, at the grand scheme, wasn't a lot of money. And you'll find that throughout the decades of your life, right? This is, I mean, I'm only halfway through the second one, but this obviously, you know, when you were little, you thought $20 was a fortune, and now you're trading with different numbers. And the same is to be said from when you're in your 20s and your 30s and your 40s into your 60s. You know, so it's honestly a journey for everybody. And a big reason for me wanting to do this is, you know, when I'm 55 years old, God willing, I'll be able to look back and see, you know, what stocks were at this time, what I was thinking at this time. I mean, I can look back and when I started trading, when Amazon was $30 a share, and go, wow, Amazon's $247 a share. Wow, those were some crazy times, right? Because you always hear the stock market's overvalued. The stock market's going to crash tomorrow. It's going to crash next week. It should have crashed last week. It's all nonsense, okay? And I will fall victim to the next recession. What does that mean? As long as you don't panic sell, how did you really fall victim? When the market moves as a whole, I just call this noise, okay? If the market will always recover as a whole. Where you can find yourself in a conundrum is when the market's doing great and you're getting smashed, right? That's a problem because now you're missing out on bullish times and you're losing money. That's a problem. When the whole market goes down, buckle up. Just don't sell anything and you'll be fine for the most part, as long as you pick the right stocks. Honestly, the biggest fear in today's day and age is dead money. And you definitely could have found yourself in those situations with stocks like Microsoft or Meta or Tesla, where you might have bought it 3 years ago and there's no return at this point because they were so overvalued at one point and people kept buying in. So this is what we're gonna go over. PE ratios. What do they mean? How to play them? Value traps versus growth stocks, right? Those sorts of things. So when you have a stock like SoFi is definitely a growth company, and they've proved it time and time again with earnings report, growing sales at 20+%, right? So they are going to require more of a premium to buy into SoFi than it is to buy into a very stagnant stock. We'll say Ford. Ford probably trades at a multiple of 8 times earnings. SoFi probably trades at a multiple of 25 times earnings, right? You could say that's fair. Because SoFi is growing more rapidly than Ford in terms of percentages. That's how the stock market works. If a company is not growing, you are not making money. Okay? That can be true. It also cannot be true because we can have, momentum and algorithms that are buying up stocks for really no great reason or based on speculation. But ultimately, if you buy true growth stocks with potential, it may take a week, a month, a year, but eventually it will come to fruition and the algorithms will align. This is what I found. Like, for instance, PayPal. I was able to make a bunch of money recently with PayPal. And everyone said, oh, PayPal is a value trap and PayPal, and we've lost so much money over the years. It was trading at 8 times PE. Okay? They had rather sluggish growth, but I said, somebody is going to step in and buy this thing before it hits zero, before it's at rock bottom. And you cannot trade at a negative PE ratio with positive earnings per share. It's completely impossible. Everyone fought to differ, and they just got a buyout offer at $60. I bought in at $38. I got out. I got out at like 57. Okay, I'm not going to wait for the acquisition. But and it only took about a month and a half. But in that month and a half, it basically did nothing. It did nothing. And it would have done nothing for another year if Stripe didn't step in and offer to buy the place. Okay. But moral of the story is PEs are super important. Growth, super important. And how they mesh together is essentially what makes a good buy. So if you have a stock that's growing and it doesn't reflect that in the PE, bam, that's where all the money's made. Okay. So like I said, two ways to make a bunch of money off the stock market. You can either find the company that reinvents the wheel, or you can get something at a crazy discount. All right. So I have not ever invested in a company that reinvented the wheel. Unfortunately, I would love to. I didn't get in on the tech race at all. I didn't make much money off of the Nvidia. I traded in and out of it a little bit, but to me it was always overvalued. And I think for the next 2 years it'll be pretty flat unless something crazy happens. I was not a Tesla guy back in the day. I was not a SanDisk guy. So all these stocks that shot up like thousands of percent, I was not in on. So this 51% came from basically engineering earnings off of this playbook right here. Okay. I think Amazon is always a buy, but I was heavy into it at 198, ran it up to 275 and sold it back down. That's how we do it. I would love to buy back into Amazon. Okay. And when this 250 becomes enough of a bargain, or it either goes down in value or their earnings go up, I will eventually buy back in. I can almost promise you that. This is not the last I trade of Amazon. Same with Meta, same with Microsoft, same with Adobe. I think Adobe's story will be very similar to Google. Okay, when ChatGPT first came out, everyone said nobody's going to use Google. Everyone is going to use ChatGPT to look up their stupid questions. And then Google integrated AI like any big company would. And it doubled in like 6 months. And dummies like me sat there and watched it. Okay. So I think this is the same story with Adobe. Adobe's a very strong company. They have a transition going through right now. And once they're able to figure out where their place is in this new AI world, that it's going to quickly double. Okay. So Microsoft, like I said, for the past 2 years has been basically dead money, but I've been able to make like $30-something thousand just buying in and out of it. When it runs back down to the mid threes, I buy in heavy, and when it gets back up to the mid fours, I sell out of it. I think I'm bullish on Microsoft overall. I think it's a $600+ fair value. Meta, I buy a ton of it when it's in the high fives, low sixes. I sell it, before it approaches seven. They have earnings coming up. Q2 earnings is among us, so that can be scary times. So we'll see what we do when that comes. That's in 8 days now. So I will definitely make another video before that on how I'm going to handle that. And Elf is another one that's definitely a growth company. It's very volatile. So if you're going to invest a lot of money in it, you better be ready for the swings. But the swings are where you make money as a trader. So getting in at a good price and getting out at a good price is paramount for making money in Elf. SMR is another one. It can be a boom or bust stock. It's a nuclear reactor company that sells modular reactors. Okay, they're the only one that has licensing from the U.S. government to produce these small nuclear reactors. They have no sales yet, essentially, and they're losing a fortune. But it's a boom or bust, and it has a lot of volatility. Look, today it's up almost 10%, right? So if you buy it at the right place, the money's there. Okay, and overall in the nuclear industry, I'm bullish in the next decade. Very bullish. So I think that in the worst case, they go bankrupt. In the best case, I can easily see a 10x in the next few years here. So just keep an eye on it. Either way, this is the start of it. I'm learning how to make these videos. Trust me, they're going to get better. But what we're going to do is we're going to take 100,000 and we're going to turn it into $1 million in 6 years. That's the goal. I want to know if people would like to see me add to this account with outside money. So how I typically do, like $1,000 to $1,500 a month of my own money into this account, or we just keep this account at 100,000. Because like I said, I split up my accounts so I can deposit into this account, I can deposit into my other account. So I'd be curious to see, I'd like to put out a poll or something of whether people would like to see me add to this or keep it as is. But as of right now, this is the playbook. This is the playbook. And it will be changing in the next week because we're going into Q2 earnings. And I would definitely like to shield myself in my 51% year to date from potentially treacherous downside going into earnings season. However, we might miss out on some gains. You never know. So thank you for watching. This is the first video. Please subscribe or whatever platform this is on. Just do that stuff. Because I've never had an online following. All of the money I have made has been from a home service business, construction, and I recently got my engineering degree working as an engineer. So none of this is internet money or sponsor money or whatever the case is. This is strictly hard-earned money, just like you made money. Okay, I'm not special whatsoever. I've just been able to also make money in the stock market. So I would love to share this information, gather thoughts, listen to people. I didn't manufacture this up. I have learned so many things from other people that got me to where I am now. So don't be afraid to tell me what you're thinking, what you see, what's a good buy out there. I'd love to hear it, and I'd love to talk about it. So thank you, and until next time.